Hello, this is Louis Llanes, and this is Market Coffee Talk. Wanted to give you a quick check-in because there's been a trend that has been uh, just really coming to our attention over and over and over again. Many people are just saying, you know what, the heck with it. I'm done. I'm done working. I'm going to retire. There's a lot of people that are just saying, I've had enough. It's time for me to say goodbye to my company that I've worked for many years. And it's time for me to just either go out on my own and do some consulting and retire, work part time, or to just flat out retire. And there's a lot of people that worked for the same company for decades and decades, and they're just saying, I'm done, even though they were planning on originally to do it much later. A lot of people are planning to retire sooner rather than they normally would have. And the last time I saw this kind of trend was during like in the late 90s, early 2000s. And there's so many things that are reminding me of that. I wanted to tell you a quick story, a tale of two people that I know. And these are real people. And these people retired at the same time. And these people basically, I'm going to kind of zoom into a chart of what the market looked like. These people basically retired right here at the area just before the dot-com bubble. And one of these people had a deliberate plan on how they were going to deal with their plan, their retirement. And then the other one wanted to be real tactical and just follow the trends of certain stocks and really didn't think about their whole picture. They didn't kind of think about a whole plan. And they really wanted to stay in that mode. Both of these people both had about the same amount of money. Both of these people were in a situation where they were spending about the same amount initially. And one of them had a very, very successful retirement. And then the other one really floundered. So now I can tell because it's been well over 20 years, right? And these are real people. And so if you look at this chart that I'm showing you up here, the market actually declined. And if you look at the NASDAQ, it declined 80%. 80% it declined. So, and before that happened, the market was on fire. Everybody felt really comfortable, and people were retiring early. People were saying, you know what, I'm done. And so the people that had their plan correct did a great job and sailed through it, really. But those that didn't, they got underwater. If you think about people that were following the trends and that just decided they were just going to buy and hold indexes, these are people that said, hey, I'm just going to buy the index and I'm just going to hold it. They got, I'm trying to think of a word that would be politically correct. They really got slaughtered, right? Because the market came down hard, the indexes came down hard, and they bought and held because they were ingrained in their mind that you should buy and hold the indexes. It was low cost. You know, the indexes were cheap. You know, you can buy low cost index funds. People were buying mutual funds too that tracked the index, and they just bought and hold because that's what they were taught. And it took years and years and years. This is a very long-term chart here. It took well over 15, 20 years for the market to hit a new high. It's crazy. Now, if you're taking money out at the, you know, in regular intervals because you're living off the income and you have a market like that, many people cannot retire correctly. So the question I'm asking, and I think the question people should be asking is, am I ready to retire right now? Is this something that is doable? And we're seeing a lot of people wanting to do that. Now, people that are doing that, we know how to navigate through this because we've been through this and we know how to help people get through this. But I want to say a lot of people are just thinking they can buy and hold the indexes and be fine. So I was just on a JP Morgan research call talking about the expected rate of returns in stocks and bonds. And there's ways that you can kind of calculate the long-term expected rates of return. And JP Morgan's analyst said, hey, you know, a typical 60% stock, 40% bond portfolio is likely to earn only 3.82% for the foreseeable future. That's 3.82%. Now, if you take inflation out of that, that's basically a zero rate of return. And I think a lot of people who think they could just buy the indexes and just buy the broad market and earn 10%, because I think what's happened is a lot of people are looking at the last 10 years and they're kind of extrapolating. And people, it's very interesting, people lose sight of the long-term history and the long-term values, because you see the expected rate of return, as many of you know, on an investment has to do with what price you pay for an investment. Any investment, I don't care, real estate, it doesn't matter what it is. What am I paying for it right now, and what are the cash flows on that investment going into the future, and what is the discount rate that we can apply to that? Like, what is my required rate of return? So if you kind of back into it, the returns for people who are just buy and hold is not really that expected to be very good, mainly because we've gone up so much in value. Interest rates are so low that I think people are extrapolating in a way that they shouldn't. So the reason why I'm bringing this up, because there is hope. There is hope with this. The hope has to do with active management, because if you have an active management strategy where you're buying strong value, strong quality, good dividend yields, and you're not just buying the whole market, you have a much better chance in doing better than that 3.82%, which 90% of the people that I know need to make more than 3.82%. Most people need to make a 2 to 5% above inflation rate of return in order to retire comfortably. And if you kind of just break it down to what people are telling us these days, people are saying, I want to, first of all, most people are saying, look, I care deeply about my family. I have had a successful career in my life. I've accumulated some money. I want to make smart financial choices, and I value my time, right? I value my time, but I want to live a worry-free retirement. And some people maybe are 5 years away, 10 years away, or right up on it. But they want to live a worry-free retirement. Most people do, obviously. So, and if you want to live a worry-free retirement, it requires more than just buy and holding an index. There's more to it than just that. And and we can get into a lot of details on this, but I think a lot of people should be asked the question, will the market ruin my retirement? And I'm going to tell you that my answer to that question is that it depends on how you decide to do your strategy. If you decide that you're going to just follow the Wall Street wisdom and you're just going to buy and hold the indexes, or you're going to buy a group of mutual funds that all are tracking the same investments, even though they're different names, they have high correlation and will likely not do well when we have a bad market. If you just follow that wisdom, and if you just go that direction, you might have a harder time retiring, and the market could potentially ruin your retirement. But if you're a smart investor, and if you use active management and you use financial planning techniques to secure your income levels so that you can weather storms and not just be a slave to the ups and downs of the market, then you have a chance. You have a chance to do really, really well. And in fact, we have had clients during this entire period that have successfully retired during that period of time when the markets were really high, and then for a long time didn't do anything and took income year in, year out, month in, month out, and are still doing well today. So I think we're kind of in a similar situation, maybe not exactly the same situation, but something that rhymes with it. So if you are in that position, you need to think about how you're going to really plan this thing out. Don't be sucked into the last 10 years performance as being normal, because the last 10 years performance is not normal. It is not normal. We're above the average. Our valuations on a multiple level are worse than they've been, and they're less attractive than they've been in a long time. And I'm not trying to be negative, because this is just the normal thing with how markets gyrate. But let me tell you, People who invested in real estate during this period of time, they had a horrible, horrible time. I mean, it's not like, oh, there's some magic bullet asset class that I can take that's just going to make it all easy and well. No, it doesn't work that way. In fact, right now, real estate discount rates are really out of control. I mean, they don't make any sense. So investors need to be smart about their money. And instead of just buying the indexes, and if you read my book, The Financial Freedom Blueprint, I talk a lot about this. There's a chapter called Staying Ahead of the Herd, Being Ahead of the Herd. And a lot of what I talk about is this ADP criteria. And the ADP criteria talks about how you invest, and then how you structure your portfolio so that you aren't having a problem with this. The book's coming out in November, and I'm going to make that available. There'll be ways that you can get a hold of it pre-launch, ahead of time, and pre-order. But I will tell you this: being complacent right now is not a good idea. The right thing to do is to do solid planning. And if you want to retire, if you've been thinking about retiring now, make sure that you go through a checklist. Actually, I just had a meeting the other day with a client who just did it. She just said, "I'm done. I'm retiring." And we had to go through again and say, okay, what are your sources that you have? The equity in your home, the tax managed portfolios that you have, your retirement accounts, and what is the best way to deal with that so that your capital is maximized for the rest of your life? It's not something as simple as saying, I'm just going to buy and hold a bunch of indexes. And I keep saying that because that's what I see people doing right now. And I think people are going to get hurt. And it's my job to help people not get hurt. So I hope somebody's listening to this and can really capture the message that buying and hoping, buying and hold is like buying hope. And especially in an environment right now, active management is something to look at, and financial planning is something that's really required if you want to retire in the near term, in the next 5 years, 10 years, because we're in a market right now where the expected rates of return are not as attractive, not like the last 10 years. We have to look forward, and there's a different way that people should be investing now. So anyway, I'm in New Mexico right now, and actually it's absolutely gorgeous. I could show you the mountains right outside. It's just crazy how beautiful it is here. And I hope you're having a good day today. And if you need anything, just let us know. Go to wealthnetinvest.com, like and subscribe. As you know, you may know, we have a podcast, a dedicated podcast that will be coming up. It's called The Market Call. It's going to be called The Market Call. And we are getting that set up. We're going to launch that, and we'll keep you posted on that. And we're going to have lots of special guests, and we're going to be talking about all things financial. And there's going to be some entertaining and educational stuff on there. So, but in the meantime, before that, our new podcast comes out. It's called Market Call. We'll let you know about that. Just let us know if you need anything. Go to wealthnetinvest.com and comment, share, like, subscribe, and I hope you're having a great day. We'll talk to you guys later. Bye-bye.